Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Shares of Carvana are down about 95% over the past year and down about a third from when the company IPO'd. Here's the thing. You look at the company's revenue and it's grown tremendously. There's a good chance you're watching this video. You're looking at Carvana as a turnaround stock and you're trying to buy the potential dip. I want to tell you, there's a huge risk right now that the company's not going to be able to turn that corner and investors are not going to get big gains going forward. Instead, there's another company out there that you may want to take a look at. I'm Jason Hall. This is The Smattering. And Tyler Crow pitched this idea to me. He's got a company he wants to talk about. Hey, Tyler, how's it going?
It's good. All right. So this was the elevator pitch that I sent to Jason for this entire idea. Were you intrigued of Carvana's concept, but you wanted an operator that could actually execute this? I have the company for you.
For those that don't know, Tyler has a pretty solid track record of identifying companies that
nobody's ever heard of.
And that nobody's ever heard of and that have made money. And this is a perfect example of that one. The company that you're bringing is Lithia Motors. So what is Lithia Motors?
Aside from it sounding like it would be an EV company, Lithia Motors is actually one of the nation's largest owner and franchiser of new and used car dealerships across the United States. They have almost 300, closer to 275 stores, dealerships, and then 300 separate websites that they actually run for online purchasing and selling of vehicles. One of the things that they claim is that 90% of the United States population is within 300 miles of a Lithia dealership. I know 300 miles sounds like a really long ways, but I'm going to assure you, growing up in a really small town in rural New Hampshire, sometimes you have to drive that far to get a car.
The other part of it too, Tyler, I think is important, is that in the modern age of buying cars, 300 miles means that it's close enough distance for easy, quick delivery. And the numbers start to work in terms of delivery costs and that sort of thing, because so many people still find cars on the internet. The one thing I do know about this company is they've got that almost 300 physical dealership locations, but they've got hundreds of websites as well where people are going to find automobiles.
And you were like 99% close to an amazing segue. So kudos on that, because I'm going to move on to it's a brand that they've been launching within Lithia. It's called Driveway. Basically, Lithia went out and wanted to do a Carvana competitor. You may have heard of Driveway before. If you're searching for Carvana, maybe it's like the 4th or 5th on your Google ad search or something like that, because they're trying to hit that demographic. But it's the same concept. We're going to basically publish our entire inventory online, all the services that Carvana purported that it wanted to do. Sell your car online, buy your car online, all of those things, reduce all the friction, all of the hassle of going to the used car dealership, except it's just built into a used car dealership. And that to me was the biggest part. Every conversation I heard around Carvana was changing the customer experience, which is great. But a lot of people underestimated the backbone you need behind that to make it work. The inventory, the auction lots, the ability to service vehicles when you bring them in. If you have that existing footprint of 300 dealerships with the service centers built in, it's a lot easier to do that because you have that capital base installed versus Carvana that's got to spend billions of dollars building out that infrastructure.
A good example, Tyler, in the notes that you provided is just the amount of CapEx as a percentage of revenue. The Lithia is able to leverage that existing infrastructure. I think you said that their build outs, we're talking about 6.3% of CapEx versus almost 30% of CapEx for Carvana. That's a ton of money that you have to deploy to continue to expand. And let's talk about the realities where Carvana has clearly failed is on the things you're talking about. It has not been a good operator. And as its scale has increased, its operating expenses and its operating cash burn has accelerated instead of narrowing.
Yeah, one of the underappreciated parts too about used car buying and selling, Carvana had its thing, and they probably had some pricing algorithms built into it. Lithia, CarMax, you can name a whole bunch of other used car dealerships out there. They have decades of car price data built into their systems. They're not to sound crass, I feel like a lot of people walked in and said, oh, used car salespeople are idiots. No, they're not. They know exactly what they're doing, and they're pretty good at it. And you take all of the advantages of the existing used car dealership and add that more frictionless experience through the online experience Driveway. And I think you really have an opportunity here to basically take Carvana's lunch, if you will.
Yeah, that makes sense. So to put it all together and think about, again, the thesis is we've seen lots of companies in different industries attempt to take some sort of a tech stack and disrupt an existing business that's full, an industry that's full of good operators, and have failed to necessarily do it because they haven't figured out how to be good operators in those industries. We can look at companies like Lemonade in insurance as an example, Carvana in used cars. And this is a case of taking Lithia, a company that clearly is a really good operator in this segment, and is bolting the tech stack on top of that business as a way to drive growth and continue to remain relevant. Now, does that mean that Lithia is worth buying now? You have to start thinking more about valuation.
Yeah, it's one of those things where it's certainly cheap right now, and it's coming off of an awful year. It's, if you talk about 2022, we all followed the used car price. Remember, like post-pandemic 2021, used car prices went through the roof.
But because there were no inventory, and if you're a
Right.
used car dealer, you're having to compete to get inventory, so you're not necessarily gaining more margin because higher prices.
You know, you're buying at auction for higher prices, your trade-in values are high, all of those things, which, you know, if prices keep going up, you're fine. But 2022 used car prices fell through the floor. And so basically everyone was
They all made a ton of
more.
money in 2020, late 2020 and early 2021, but the
than
year and a half since
2022.
then has not been the kind of high margins. Yeah.
Yeah. But even on top of that, like it was a bad year. Right now, Lithia Motors trades for 4.8 times earnings. This was last year. It wasn't a great year. 2023, we're not sure yet what the numbers are going to look like. Hopefully it's going to be a little bit better. But this is a business that is built for the cyclicality of the used car market. And there's other more resilient parts of the business like services, repairs, maintenance, all of the things that you typically get with a dealership bolted on. And those are big profit centers, services, repairs, things like that. So you toss all that together and it really looks like a good, viable alternative for people looking to make that kind of investment. Like, I want something that's going to change the car buying experience. I think Lithia is someplace some people should start looking.